a CPA firm with offices in Tulsa, Oklahoma City, and they are quite ORU friendly. They have representatives at every one of our meetings. They have a number of people from ORU who work for them now, and they would be interested in meeting you and knowing you if you'd like to, or just go and participate and have a good time and eat our food. Would you turn with me in your book to exercise 20-5? It's on page 949. That's where we're starting today. We need to know about manufacturing. We need to know about job order and process. This week's all about job order. But this week lays the foundation for the next two chapters, process and standard cost systems. And I'm hoping you're getting up to speed on that. You need to know account types and journal entries to record the flow of costs through the accounts. You need to know why manufacturing overhead is different, why we treat it the way we do, how we determine the overhead rate, how we use the overhead rate to apply overhead to production. This exercise is all about manufacturing overhead, and I'm hoping that you'll read it with me and tune in and participate. It's at the bottom of page 949, and it says, our company applies overhead to jobs on the basis of machine hours used. Overhead costs are expected to total $305,000 for the year, and machine usage is estimated to be 125,000 hours. For the year, 322,000 of overhead costs were really incurred, and 130,000 hours were really worked. Top of the next page. Compute the manufacturing overhead rate for the year. Could we start out with one of you volunteering for a general formula? No numbers yet. What is the formula for determining the overhead rate? Alina, can you describe it to me?
It's the manufacturing overhead rate over the actual hours or direct labor or whatever.
That is very close. It needs a little tweaking. Is your hand up, Mika?
Yeah.
The overhead rate is determined how? That's not fair. Deanna? Say it to me, Deanna.
Estimated manufacturing overhead divided by, or times the amount of activity.
We need to divide it this first time. You were right. Divided by. Okay? And tell me the denominator again, because I tripped on that.
The activity.
The activity. Some activity base. Here's the slide out of Monday's lecture. We didn't get to it, and it's on the video if you wanted to see it. I think I wrote something similar to that, the shortened version of that on the marker board in class last time. Estimated overhead for the whole year. What happened in class last time when I addressed manufacturing overhead was that we thought of 4 possible ways to do it and eliminated 3 of those as flaws, which made this one look the best of all. This is the best way to do it because all these other ways aren't good ways to do it. And the way you do it with all the words is not wait until the end of the year, but you estimate the overhead at the beginning of the year. What are we doing right here?
A friend in another discussion asked me to record your discussion.
Well, why didn't you tell me? I don't mind doing it. I just didn't want to be surprised. Who is the man?
Luke.
Rats, I can edit that out. If I'd done that on my own, I would have edited it out. So, 3 of these things we were eliminating. One of them we decided on, and one of those that we considered was waiting until the end of the year when we knew it all. Well, we took the best of that flawed one and based it on the total. This is total overhead for the whole year. The difference is it's not at the end of the year, it's at the beginning of the year. We don't know. We're going to estimate. And then we considered dividing by 12 and talked about how that wasn't a good idea. How it worked if you produce the same amount every month, but if you produce a different amount every month, you need to divide by something that will vary directly with output. In class last time, we named the 3 possible activity drivers. Can you name them right this minute without looking in your notes? We might divide by, Daniel, name one.
Labor costs.
We might divide by name one, Sam.
Labor hours.
labor dollars, labor hours. Deanna, is your hand up? Then what?
Machine hours.
Machine hours. All good possibilities. All of those would work. Any one would work. They choose whatever works best for them. Can we find, excuse me, before we go to that, can we name that formula simpler than that? What's the most important word in the numerator? I didn't hear you. No. Because if you say estimated, I love this. It worked yesterday. Let's see if it'll work today. It's not estimated. Oh, phooey. Every time. I mean, this is. We think this
It's a nice rig there. I'm trying to get the screen. It works. I think that's best.
It's not estimated because if you eliminated all the other words, you'd have estimated divided by estimated. Estimated what? That's not the most important word there. Pick me the most important word. Alina, what's the most important word in the numerator?
Overhead.
I think it's overhead. What's the most important word in the denominator? Activity. So if you want to learn them all, I think I had the obligation to say them all to you. Every one of those words is important in conveying the idea. But once you have the idea and you want to remember it, isn't it just overhead divided by an activity for which we're looking? Overhead divided by an activity. Let's find overhead divided by an activity in this problem. Find me some numbers. Daniel, name one. One's having a terrible problem. I'm so sorry.
The answer or just 300?
I want to know the numbers that we plug into this.
305,000 divided by 100.
305,000 was our estimate of total overhead for the whole year. And we're going to divide that 305,000 by the machine hours we expect the machine to run, an estimate at the beginning of the year for all year. How much? 125,000. Are y'all with Daniel and me right this minute? Say yes.
Yes.
So, if that's the case, you need to borrow calculators? Who does? I got a whole handful here. Who wants a calculator? I got calculators. One more, and maybe more. Last call.
This whole thing together, yeah.
I need some people that got this to raise your hand and tell me you got me a number. Grace. Auditors. Our estimate is when the machine runs 1 hour, we incur $2.44 in other miscellaneous costs. That's insurance, heat, light, power, all those other costs that are so hard to identify and associate with a product. We wrap it up in one nice little bundle. When the machine runs an hour, we incur $2.44 in miscellaneous kinds of costs. Now the question is, what are we going to do with that number? So the problem says, the problem didn't say. The Amplified Version said, I used to read to y'all out of the Amplified Version and it drove you crazy. Remember that? Back in the good old days?
Still does.
And people would argue and get mad and throw stuff. You seem to be driven by just wanting to see something in writing. So, I decided I'd put it in writing. Here's what the exercise should have said. Make an entry to apply overhead to production for just 1 month, January, when actual costs were $28,000 and 11,500 machine hours were really used. You're supposed to know the entry, the account titles, what to debit and what to credit already. Daniel, you did the last one. Thank you for being here. Who's going to make me this entry? Deanna?
Debit work in process and credit manufacturing overhead.
Prior to this entry, we debited work in process for direct materials. Prior to this entry, we debited work in process for direct labor. We're trying to record the third element of cost. Debit work in process for the manufacturing overhead. This is one of the key entries that we make. It takes 3 elements of cost to produce a product, and here's the third one. Deanna, let's make this entry for words before we make it for numbers. A word to describe this amount? Louder? You know, you all make fun of me when I say actual all those times and drive you crazy. But I do it for this moment, to draw the contrast between all those other things and this one. This one's applied. It's different. It's an estimate. If you're willing to talk to me about how to come up with this amount, would you raise your hand and talk to me right this minute? Daniel?
You're gonna take the $2.44 per hour and times it by
The one you determined?
Yes. And times it by the 11,750 hours.
Last hour, I forgot exactly how the answer went, but it was something like multiply it by something, or multiply it by one of those other things, or maybe a question came from this. After the person had given the right answer, they said, why didn't you multiply it by any of those other things? Well, there's a way to remember that, and I'm hoping that I can appeal to you if you're not sure right this minute. A little while ago, not very long ago, we named 3 possible things we could have divided by to get the rate. We could have divided by direct labor dollars. We could have divided by direct labor hours. We could have divided by machine hours. Now, whatever you choose to divide by in the beginning to get the rate is then what you're after to multiply by. The actual activity. When that actual activity occurs. In class last time we used examples where we produced 1,000 units this month and 2,000 next month, and therefore the employees earned more, twice as much. So if we were using direct labor dollars, we'd multiply by direct labor. That's the most common one. 80% of direct labor we did in class last time. Or if it's direct labor hours, the employees worked more, we'd multiply by more, we'd apply more manufacturing overhead to that. Or in this case, since we divided by machine hours, we're looking for the, you have to go, no matter how you do it, you have to go someplace else and find that actual number. And multiply that actual number. How many hours did the machine run? 11,750 hours were really worked. Times the rate, $2.44, is 28,670. Is that what you said, Daniel? Here's the work. 11,750 hours were really worked. And $2.44 is the rate. If you'll leave them right there, we'll see about the rest. Thank you so much for bringing it back. Appreciate it. Your hands up.
Yeah, I have a question. So what is when it says actual cost for $28,000?
Thank you for bringing that up. So I asked Deanna about this, and she said it was applied. And where did we record actual manufacturing costs? That isn't fair for you to ask me a question and me ask you the same question right back when I know you don't know it. I mean, you wouldn't have asked, right? Help Sam out. Where do we record actual manufacturing overhead costs? Vanessa?
When we're crediting work in process.
That's a funny way to define it. I don't think it's right, but it's also, it's making me think too much. There's an easier answer than that. Where do we record actual manufacturing overhead cost? Let me refresh your memory. 3 stages of production, 3 inventory accounts, 3 elements of cost, 3 parts of manufacturing overhead. That's what I'm talking about. Where do we record manufacturing overhead? Mika?
Where do we record?
That's the question that was asked. Yes? You had your hand up?
Oh, I have a question after that.
Not really. I don't think. I think he asked me, where is the actual manufacturing overhead? And I think that's the same question.
Nowhere.
It would be on the overhead, right?
Michael?
Nowhere.
Yeah, we did.
We do? We can record it actually?
Here, one more time. There are 3 stages of production. There are 3 inventory accounts. There are 3 elements of cost. There are 3 subparts.
We never credit it for actual,
That's
though.
not the question.
Oh.
I think he asked me, what about the 28,000 described as actual?
It would go on the manufacturing
Didn't you ask me
overhead.
that? I'm
That's a
still answering
desert.
that question, and I have my wits about me. I've said it 3 times. In asking the question, I've said the answer. What? Say it.
Process?
No?
Manufacturing.
In manufacturing
I
overhead.
said that like.
Yeah,
Right,
but you
right.
didn't, you had your hand up and then I asked you to say it, you wouldn't talk to me. Don't ask me why. Here's the answer. The 28,000 is in manufacturing overhead. It's one of those 3 things we record there. Indirect materials, indirect labor, and other. That 28,000 would have been recorded in various little entries that we make, the summation of which is in manufacturing overhead. Did I answer your question, Sam? And we just made this entry that I skipped by to post to this account to try to answer his question in the order that he asked. Are you with me right now? Yes or no? Yes or no?
Yes.
Does anybody remember the question Michael asked in class last time? Does Michael remember the question he asked in class last time?
How do we zero out manufacturing overhead?
Michael had a little aha moment in class and realized that there is the potential that manufacturing overhead won't balance. It'll have a balance. Now, income summary gathers up information and allocates it all. 0 balance. Factory labor gathers up all the information and allocates it all. 0 balance. Manufacturing overhead gathers up all the actual and allocates the applied, and the chances that actual and applied are going to equal are remote. Do you agree or not? The chances are they're not going to agree. Then what are we going to do with this on a monthly basis? What are we going to do with this on an annual basis? We need to know. Have we read that question yet? 2. What's the balance of manufacturing overhead right this minute? Describe the balance to me. And tell me where that balance should go. Well, let's do it step by step. Has everybody done the math here? You need a calculator to do the math? Oh, not. The balance of this account is, everybody said?
670.
Debit or credit?
Credit.
The balance of manufacturing overhead right this minute is 670 credit. The 2 choices of how to describe that account are under-applied and over-applied. Have you made up your mind? I should have had that weekend guest stay in the room a second. I think knowing nothing about accounting, explaining just a few descriptions about these 2 words, that a logical individual, well, we don't know that, do we? Could come up with the conclusion that you need to come up with right this minute. This is actual. This is applied. This is over-applied or under-applied. Say something.
Over-applied.
We applied more. That's over-applied. A credit balance in manufacturing overhead is over-applied. A debit balance in manufacturing overhead is under. Don't just say it because it's obvious and the other choice. Say it because it makes sense. What if this number had been 30,000? And this number had been what it was. The balance of this account would be debit or credit.
Debit.
And would be described as
Under-applied.
under-applied. We didn't apply as much as we had, as we incurred. And you've got to decide that every month. The question is, how is it described? It's described as over-applied. And then, how would it be shown on the financial statements? Does it go on the balance sheet or the income statement? Well, I'd invite you to turn on the back side of the handout and go with me down the paths of this decision tree to try to help you remember how to do this. On a monthly financial statement, this is the answer to the question Michael asked in class last time. What are we going to do with that balance monthly? And then later, what are we going to do with that annually? Are we preparing an annual financial statement right this minute? Anybody remember what the problem said? For the month of January, it said, this and this happened. For the month of January. Are we preparing an annual financial statement, yes or no?
No.
No. So we're going to take this path and concentrate on what happens down that path. what the balance of the account is the driving force at this point. If it's got a debit balance, we're going to show it on the balance sheet among the other things that have debit balances, the other deferrals. This is a deferred expense. So is prepaid insurance. So is supplies. We're going to list it among the current assets on the balance sheet. In other words, we're not going to close it. We're going to carry it over. If its balance is credit, we're going to list it on the balance sheet where the other credits are. The credits are deferred credits, we call them. Unearned rent, unearned revenue. Those kinds of things that we learned first semester are in that portion. So in the current liabilities section, it's accounts payable, notes payable, and then the deferrals. This balance belongs to the future. We're carrying it to the future when it might be allocated differently. It goes on the balance sheet among the debits or among the credits. To say that it is unearned revenue is wrong. It isn't unearned revenue. It's listed with the unearned revenue, where unearned revenue is. Elena, your hand was up.
What would be the account credit for it?
Manufacturing overhead.
Oh, okay.
And B in the book says, what is the amount of over under applied overhead at the end of the year? So now we're going to pretend we've done 11 months more, just like we did that one. And it occurred to me that my numbers that are going to show up on the screen in a minute are written here, and you would think yours is wrong and you're going to erase those. So just leave your 1 month stuff above that and draw you a squiggly line, and you've got room to write the annual stuff below it. Okay? To differentiate between what we've already done and what we're about to do. So by the time we get to the end of the year, what's in manufacturing overhead? Well, John, there's some evidence of the problem that describes that.
Yeah.
You see it? Talk to me.
322,000.
It says so in the problem. For the year, 322,000 of overhead costs were incurred in total. What else does that say, John?
It says 130,000 hours of labor.
A machine were really worked. So that 322,000, the actual amount was debited to that manufacturing overhead account as we encountered those things. In those 11 months, we debited this for indirect materials. We debited lots of times for indirect labor. We debited it for depreciation. We debited it for property taxes. We debited it for all those other costs we incurred. We just kept stockpiling them. This is the total amount we recorded, including that January figure. It's not in addition to. The January figure is included in this. Yes, everybody?
Yes.
Mm-hmm.
So, John, tell me about the machine running 130,000 hours total. What did we do with that?
Well, we estimated that it would be $2.44 an hour.
Good.
So if we multiply those two together, we get 317,200, which is the applied.
John got, say it again, John?
317,200.
$317,200 is the applied amount, the estimated amount. And we did that not all at once like this in December. We did a little bit of that in February and March and April and May and so forth. And we did one small entry like that in December. But the sum of all those 11 entries we've made is this one. Are you with me right this minute? Say yes.
Yes.
So what account titles should be given this entry? John, you want to stay on the hook?
Yeah.
Debit
Debit work in process.
and credit?
Manufacturing overhead.
Debit work in process and credit manufacturing overhead is the entry we make to apply overhead to production every month. Let's post. That credit, 317,200, needs to be posted to this account. How about finding the balance of this account for me?
4,800.
Sam, sorry. Sam,
4,800.
debit or credit?
Debit.
Auditors? It's a debit balance of $4,800. You need to think about the description of this account. Is a debit balance in manufacturing overhead over-applied or under-applied? Everybody said?
Under.
So until this point, would you have been making that same entry for smaller amounts in the subsidiary ledger, and now this would all be going into the general line?
Well, this is a general journal entry, and it would have been a general journal entry the whole time.
Okay.
But we would have also had to post to the individual accounts.
Okay, so like that January one would have been to an individual account, because I don't see why we would be double posting that
Well,
right now.
but we would have been, except I addressed that already. That's
Okay.
what the squiggly line was.
Okay.
So the squiggly line said January already happened, and then this is the cumulative of the whole year. That's the information the book gives. That's what we're working with. Okay? They didn't say in the next 11 months this happened, so that we would add those together and get the
Yeah.
balance of the account. It just gave us the grand total at the end of the year. But we're catching up. We could have made 12 entries here.
Yeah.
Do we have time?
No.
Wouldn't that have been redundant?
Yeah.
Okay, so that was the point. We did one to illustrate how it would have worked. Then I addressed we would have done the same thing February, March, April, and all the others. And now we're just making one combined entry just to replicate what actually took place monthly.
Okay.
Okay? It would have
So
been a
in real
small
life-
December entry.
Yeah. In real life, you would do one every month, not one at the end of the year.
Highly likely. Absolutely. Okay, here we go. So, there's a balance of 4,800 debit in manufacturing overhead. And we're facing the question again. What do you do with the balance in manufacturing overhead? On a monthly basis, we put it on the balance sheet as a deferred charge or a deferred credit. What do you do with the balance in manufacturing overhead on an annual financial statement? The decision tree on the back side of your handout suggests that, well, you help me. Are we preparing an annual financial statement?
Yes.
Yes. Well, let's go down that path. And it's funny to me that in this chapter in which raw materials, direct materials, indirect materials, materials is mentioned so many times that we have to explain this concept, and it has nothing to do with manufacturing, and it has nothing to do with being an element of cost. It's an entirely different concept, pronounced the same, spelled the same, meaning something entirely different. This bigger word to represent this one is materiality. Materiality is a concept in business that involves professional judgment, that involves comparing this item, whatever the item is, with the whole, and deciding whether this item, whatever it is large or small. If this item is large, we describe it as being material, significant, important, worth considering. Material. But if it is small and insignificant and not so important, we would say, oh, that's immaterial. Are you with me?
Mm-hmm.
So the question is, on an annual financial statement, what is the balance of manufacturing overhead, and how does that compare to other things? If this is huge, then you better do something about it. If this is just a little teeny drop in the bucket, and you've come close to your estimate all those months ahead, then be satisfied with it and move on. We don't know. Professional judgment is almost impossible to teach in the classroom. You need to get out in life and experience it. And in this exercise, we don't have enough information, enough numbers to compare that with. Let me make up two extreme examples. $4,800. What do you think about $4,800 to General Motors? Material or immaterial?
Material.
If they came within $4,800 on an estimate, they'd think they got it right on the nose with the billions of dollars they're dealing with. Yes?
Yes.
How about $4,800 to the Avon lady? Y'all know who the Avon lady is?
Which one?
Yes or no? A typical one.
Okay.
Some people never heard of the Avon lady. I'm only using the Avon lady as an example of a business owner who has a small business, a small entrepreneur. $4,800
A lot.
Material.
could be material, could be significant to a small business owner. Yes?
Yes.
We don't know. But we can go down both paths and decide what to do in either. So let's go down the easier path. Let's say we're satisfied with our estimate. We came close. Consider with me the flow of costs through the accounts that you saw Monday and you've experienced this week. Goods start out in raw materials. They're transferred to work in process. they go to finished goods, eventually they wind up in cost of goods sold. Do you remember the flow of cost through the accounts yet? Yes or no?
Mm-hmm.
You should. It's Friday. And where do we introduce the elements of cost? We introduce them in work in process. We combine the direct materials, the direct labor, and the manufacturing overhead in the working stage. Remember? It is at this point that we're questioning this estimate. If this estimate was close enough, where do you think most of these costs have wound up? Most of the goods we produced have been sold. They're in cost of goods sold. It looks like gravity got them. Transfer the balance to cost of goods sold. If you're close and you're satisfied, just move this small misstatement to cost of goods sold. But if you missed it big time, if it's significant, then what other accounts are misstated as well?
All of them.
All of the ones since introducing that misstatement. Then whatever's in work in process is wrong, and whatever's in finished goods is wrong, and whatever's in cost of goods sold is wrong. This says to allocate that balance, that misstatement, proportionately. So you're not responsible for the math, but let's consider how you would do it, okay? Remember in the partnerships chapter how we learned to make up our own fraction? 3 to 2, we summed it, and 5 was the denominator, and we made up 3/5 and 2/5. Remember that? Well, it's the same idea. So I'm not going to use numbers, but let's say we've got numbers in these 3 accounts. Then sum them. And the sum becomes the denominator. We'll take this fraction and multiply it by manufacturing overhead and put it in this account. And we'll take this fraction and multiply it by manufacturing overhead and put it in this account. Did you see what just happened? And we'll take this fraction and multiply it by manufacturing overhead and put it in this account. That's what prorate means. You don't have to do that. Is it okay to learn something in here that you might not use for a while? I think it is. So each of these accounts is wrong. We want a little bit of that to go in each of the accounts. If we pulled this off, what would be in these accounts but actual? We're restating these to actual, and that's the whole point. It was an estimate that went bad. You don't want to report that estimate that's wrong. You want to correct it. If it was significantly wrong, correct it by prorating it to all the accounts that were affected. Did anybody understand anything I just said?
Yes.
Good. So, let's read what the book says about it. In item B, or is it C? It's C. Assuming the under or over applied overhead for the year is not allocated to inventory. What did the authors just say?
It's not applied to cost of goods, or it's
Is it material or immaterial?
immaterial.